level to incomplete records. Now this particular version, so there's two versions, this one looks to try and work out how much profit a business has made by comparing what the business was worth last year to what the business might be worth this year. And the difference between the two is the profit that's been added to the capital employed in our balance sheet, or how much the balance sheet has gone up, how much the business is now worth more than it used to be worth before. Okay. So this is question one. What we've done, as with every question, we've laid out the blank document first. We're ready to put information in. So you do get marks for labeling the top part of it. So I'm just going to put this in. So it's for J. Dempsey. So statement of capital for J. Dempsey. Sole trader. Okay. And the date for this is 2009. And it's the statement of profit for 2009 for J. Dempsey. Now you do get marks in the exam. It's something that people regularly leave out, so I'm advising you to put that in. So we start off with the information we're given at the beginning, which the date for this is the 1st of 1st. So this is going to be so we can work out what the business was worth at the beginning of the year. So we need to separate these into assets and liabilities. So we have assets. We've got premises 500,000. Furniture and equipment at cost is 40,000. Motor vehicle at book value, so 36,000. Accumulated depreciation of furniture and equipment. So this is so we can work out its book value, but that furniture accumulated depreciation, that's going to be a liability. So we put that down there among all the liabilities, 14,800. Debtors is 18,400. That's an asset. Stock, so opening stock is 22,100. Rates prepaid, so that's an asset of mine, so that's 1,500. It's an expense that I've paid in advance, so that's going to be an asset. Creditors, so that's 31,340, a liability. And I've got expenses due, 5,780. And I've got a bank overdraft of 21,270. So what I'll do now is I'm going to add up all my assets and I'll add up all my liabilities, and the difference between the two of them is going to be the net worth of the business, what the business is worth at the beginning of the question, or beginning of the year that we're dealing with. Okay. So now move on to the statement of profit and loss. So basically, if I can just run through this document here first before we go any further. Just going to zoom in to make it maybe a little bit easier for people to see. So statement of profit and loss for J. Dempsey. Okay. So we start off with the assets that we have, less any that might be given to us or mentioned in the question, any liabilities, and what's left then is going to be the net worth. So that's what the business is worth at the end of the year. Now the business has capital at the beginning of the year, which we got from the beginning part of the question. We include any capital as introduced, any drawings, and that will tell us how much capital was employed. But the only thing that was missing is the net profit. So whatever the net profit is, that will make the capital employed to be the same as the net worth. Those two numbers must be the same. So we're going to find out the net profit by seeing what's the difference between the capital account of the business and the net worth at the end of the year, because the extra amount that should be in the capital account to give us capital employed must be net profit. That's how we deduce it. So we start off with during the year 8,000 was transferred from a personal bank account to a business bank account, so that's capital introduced, so we're going to add that on. Dempsey had paid 1,500 out of business funds for private house, that's drawings, I'm going to take that away. And he had taken goods valued 150 a month for private use, so they're all going to be drawings. So there's 1,500 plus because he paid 1,500 for private house repairs and 150 every month. So 150 times 12. Now, and this is all going to be minus because it's going to be reduced the value of his business. So what we'll do is we'll add our capital plus our drawings, and then we're going to take away our capital and the capital introduced, and then we'll take away our drawings. So that's the final figure. That's what the capital account is worth before we include our net profit. Now, so this capital employed figure that we're going to get down the bottom must be the same as the net worth figure we have at the beginning. So then we read the rest of the question to find out our net worth. So business assets and liabilities were 850 and 80. So the assets are 850 and the liabilities are 80,000. And that's before certain things happen, usually depreciation. There might be expenses and stuff as well that are due. So allowing for depreciation of furniture equipment at a rate of 20% of cost. So furniture equipment cost 40%, 40,000. Okay, so we're going to get 20% of that. So it's 40,000 times 20%. So 8,000 is taken away from our assets. Depreciation motor vehicle is 20% of book value. So motor vehicle book value is 36, so get 20% of that. It is 20%, just check. Yeah, it is 20%. So now that means that all of my assets my liabilities. Now, depreciation motor we have that. Book value, okay, expenses due 540. So that's going to be a liability. $540. So our assets are really worth 834,800. Take away our liabilities. So that means the business is really worth 754,260. So that means so what the capital employed must also be worth. Those two numbers must be the same. So the net profit then is going to be the 754,260. Take away the total that we got in the capital accounts. We get a net profit of 204,750. And that's how we work out our net profit. It's the missing figure to make the capital employed to be the same as our net worth at the end of the year.